Hello guys, you're welcome to my YouTube channel. This is SyntheticGoddess. On this YouTube channel, I teach strategies on how to become profitable in the financial market. So if you're new to this channel, kindly hit the subscribe button and then turn on the notification bell so that you can get notified whenever I drop any video. So alright, on this video I'm going to be explaining the secondary point of interest. In my last video, I explained the primary point of interest and I gave details about primary point of interest. If you are yet to watch the video on primary point of interest, kindly do that because I'm going to be using terms that I used on that video. I'm going to be using it here. And if you do not watch the video, it's really going to get complicated at some point. So watch the video before coming to this to watch this secondary point of interest. So, like I always say, there is nothing you can do without knowing the structure of the market. You really can't do much things without knowing the structure of the market. So, we need to get information about the structure of the market. So, what structure are we right now? We are in a downtrend basically on this time frame. On this time frame, we are in a downtrend. We've been making series of lower highs and lower lows. So I'm going to be marking out our last break of structure to the downside, and that is where I am going to be explaining the secondary points of interest. So our last break of structure to the downside was here. We had the last break of structure to the downside there, and this was the swing point. This was the swing point. So this was the swing points created. All right, so here the first thing you're going to be looking out for, like I said in the last video, is your primary point of interest. So you need to mark out your primary point of interest before coming back to mark your secondary point of interest. So I'm going to be marking out my primary point of interest first. You know, we have the last SC candle here. This was the SC candle that we created here, but this candle is just so big, so I will have to refine it to the 15 minutes time frame to get my SC candle. So I'm going to go to the 15 minutes time frame, which is a lower time frame than the 1 hour. Then I'm going to be marking out my SC candle. I have refined my SC candle. So here is where I am looking out for market to come back to for primary points of interest. This is my SC candle, and I'm going to be marking out the second point I am looking out for primary point of interest. So I'm just going to be marking that out. I'm just going to mark it out this way. I'm going to mark it out this way. You don't have to get yourself complicated. Don't complicate things for yourself. Market is supposed to be easy. Market is supposed to be easy. So don't get things complicated for yourself by marking out every supply zones or every demand zones that you see in the market. So just mark out the basic points and then wait for the market to get there and give you a valid reaction. And then you continue the structure to the downside. And always make sure that when you want to trade, you are trading a trending market. You are not trading a consolidation market. You are trading a trending market. So we had this trending market to the downside. This is a trending market to the downside. So I am sure that we are in a downtrend. So I am marking out my PO high. So I'm going to be marking out my secondary PO high now. And this is where I'm going to be teaching you how to mark out your secondary PO high. Basically, I look out for two candles for the secondary PO high. Two candles for the secondary PO high. The first candle is the breaker block. We have the breaker block for secondary PO high, and we have the reclaimed block for secondary PO high. Those are the two candles I watch out for, and I wait for the market to react at that point before just taking any action, because sometimes the market will leave the secondary point of interest impulsively and move to your primary point of interest just to use your primary point of interest. The market loves using primary point of interest. So I'm just going to mark out my secondary point of interest and wait for the market to come back there. And in the cases that the market uses secondary point of interest, that is when we have an impulsive movement to the downside, when we have distance and momentum. When we have distance and momentum, the market is liable to come and use the secondary point of interest because of the distance and momentum. So when we have distance and momentum in the market might probably use the secondary point of interest because of strength. The market might not have so much strength to go back to primary point of interest, so it will just use the secondary point of interest and continue the structure to the downside. So in this case, you can see that we had distance and momentum. We had a lot of distance away from the break of structure. There was a lot of distance away from the structure, so the market might possibly come back and use our secondary point of interest to continue the movement to the downside. So I'm going to be marking out the secondary point of interest right now. So here, like I explained earlier, if you want to mark out your secondary point of interest, you get the first break of structure that confirm you that we are ready to go for a retracement. And this was the first break of structure that confirmed us that we are ready to go for a retracement. So I am marking out my secondary point of interest from this swing point to this place. This is where I'm going to be looking out for my secondary point of interest. Anything outside here, I'm not looking out for my point of interest. So I'm looking out for my point of interest from this swing point to where we had a break of structure, a minor break of structure for a retracement. So my breaker block, I'm going to be explaining the breaker block according to what works for me, because you can see other mentors explain it according to what works for them. So you can see different explanation about breaker block, but here I'm going to be explaining it according to what works for me, and I feel it should work for you also, and that is why I am making this video. So my breaker block is the last failed order block, or let me say the last failed SC candle. The last failed SC candle. Remember, I marked out this break of structure as structure range. I marked this break of structure as structure range over here. This is where we had the first. This is where we had the break of structure. This was our first break of structure that confirmed us that we are ready for our movement to the downside. But this is our structure break. This is our structure break. So I'm going to be marking out my SC candle. I'm going to be marking out my SC candle, my last failed SC candle. So here is my last failed SC candle, and that is where I am marking out for my breaker block. And the market might give you something like an order block around this place that you can use in confirmation for your breaker block. The market might give you a base candle over there to use as a confirmation for your breaker block. And if it doesn't, you can just mark out your breaker block. Mark out your breaker block here, which is the last failed SC candle, the last failed SC candle. So here is my breaker block. Here is my breaker block. I have marked out my breaker block here, and I am expecting the market to get there and give me a confirmation. I'm not just entering the market anyhow. So for the reclaimed block, we had this movement to the upside, and market respected this SC candle, meaning this zone is valid. This zone is very valid enough. So we respected this SC candle. The market pushed to the downside. after expecting this SE candle. So here is where I'm going to be marking out my reclaimed block. This is where I am marking out my reclaimed block. I'm marking out my reclaimed block here. I'm marking out my reclaimed block over here, because that place seemed to be a valid point, and that was why we had the SE candle respected. So if we do not respect my breaker block, I will delete it. I'll delete this. I'll just delete this away and expect the market at reclaimed block. And if my reclaimed block is not respected, I just wait patiently for market to get to my primary point of interest. If my reclaimed block is violated, I'm going to be waiting for the market to get to primary point of interest. Then I wait for my confirmation to continue to the downside. And I would want you to know that you cannot predict the market movement. You can't predict every move of the market. The market might even use your primary zone of interest, your primary point of interest, as a liquidity. That is the market for you. The market might get to your primary point of interest and still use it as a liquidity. That is why you have to always wait for a confirmation. You need to be disciplined. Discipline yourself till when you can be patient enough to wait for confirmation. A lot of us makes that mistake. We do not wait for confirmation, and that is why we've been losing our money. So for you to become a successful trader, you really need to be patient. Be patient with the market. Now, the market used a breaker block to continue to the downside here. We used a breaker block to continue to the downside. Now, let me explain the confirmation I looked out for this particular market. Now, we had a move to the upside, and our last break of structure was this. This was our last break of structure to the upside. And after we had that break of structure to the upside, we are expecting the market to take this low. We're expecting the market to take this low. But instead, the market tested the other block that we had here. The market tested the other block we had here. This candle, this SE candle, and moved to the upside. Meaning this place is no longer our low that we're looking out for the market to break, because it has been tested and we had a move to the upside. We broke this high. So I am expecting the market to take this low. And once the market takes this low, I am waiting for my secondary PO high or my primary PO high. Then I enter into the market. So here we have the first POI, which is the secondary point of interest. We had the first secondary point of interest, and the market respected the breaker block. And after the market respected the breaker block, we did not break this low. And we had the break of structure to the upside. We did not break this low. We did not break this. And then we had a break of structure to the upside. And after the market gave us that break of structure to the upside, our reclaim block was not also respected. Okay, we had an imbalanced reclaimed block here, not the candle. We had this imbalanced reclaimed block. Okay, the market actually used the imbalanced reclaimed block, not even the breaker. Okay, it used the imbalanced reclaimed block, and then the market broke it to the upside. So we came back to our primary point of interest here. Before the market continued to the downside. we made a double top there because the market was unable to break that high. The market could not break that high, and then we had this movement to the downside. If you check the 5 minutes time frame, you will get a confirmation to enter into that market on the 5 minutes time frame. So that is just that for secondary points of interest and primary points of interest. Now we also have inducements at primary points of interest and secondary points of interest. If you want me to drop that video next, kindly comment in the comment section and let me know if you truly understand this that I have explained. Then I am going to drop the inducement for primary points of interest and inducements for secondary points of interest. Alright guys, this is going to be all for now. Bye for now, and keep living in the atmosphere of profits. Bye.